All right, so we're going to short render now. So we got to make sure we head over to the short side. If you're on your phone, it's actually not that way on the desktop. So anyway, if you're on your phone, make sure you head over to short, and then you're going to input your price. So let's say we want to have it set the order right here at the top of these wicks. So let's say 60.95, 0.6095. And let's have it, see, that denomination is confusing my math, but let's say, let's see, renders 53 cents, so 5,000 render. So we want to spend 3 grand on shorting render right now. So we input our prices, and then we're going to make sure we pick our leverage. Never forget to set that before you go. We tend to go from 2 to 5. You have to remember that you can lose money as fast as you can gain money in this stuff, so it's really important to understand that, your risks and all that. You want to make sure you can either set your take profit and stop loss here, or you can do it after the fact if you're not sure where you want to do it at yet. But you should also know that that means you're kind of entering the trade without having all of your rules and exit strategies and all that established. So something to kind of take note of also. So we're going to set it here. We're going to have it take profit at, let's see, right down here at the bottom of, not quite full bottom, but let's say more like right here, that second lowest candle. So 30.15, 0.30, oops, 15. And I always like to double, triple check all my numbers, because I don't know about you, but I have input stuff wrong before and gotten hurt from that. Oh, one other thing, actually, you can also just have it use these percentages here, the profit rate. I don't really use these too often because it's not really a way that we really teach people to trade, but you could say, okay, I want it to take profit when it's at 50% profit or 100% profit. But again, we don't really use those for our exit strategies, right? So something to be aware of. I know it looks tempting. Oh yeah, take profit at 100%, right? But we don't really do that. We use support and resistance through tactical analysis. And then we're going to set our stop loss. Let's see, I would base just real quick, nothing crazy, but based on this chart, I would probably set it right around this next supply demand zone right here. So let's say like 70.33 sounds good to me. Oops, 0.7033. And again, this is one I will every now and then use a little more, but it's actually the same concept. You don't necessarily want to just go by percentages, like, oh, I'm going to get out. I'm only willing to lose 15%. It's not the worst way to do it, but it's definitely not the best, because again, it means you're not using support and resistance necessarily. So anyway, we're going to set it at 7033. Sorry, I struggle saying that stuff properly. My numbers in decimals. And then we are going to we're going to execute. Boom. It says confirm. So price 6095 for 5,000 render, which was about, it's going to cost about $600. And then we're going to hit sell. And it shows you the predicted liquidation price. That, again, sorry about my confusion here. I'm not really sure why it's saying cost at 620, because that's not the equation that should come out to. If we buy 5,000 renders at 60 cents, it's clearly 3,000. So disregard that right there. I don't know exactly what that's saying that for. And then we'll hit sell, and wow, there we'll have it. Your order will execute right when it hits that price that we input, because it's a limit. And then you'll have all your info for any relevant info for the trade right in here. And again, remember,
If I could just add something, you're doing a really great job, but I did want to add something there.
yeah,
When you look at the chart, one thing that I like to do personally when I'm taking profits is I'll go down and look at the daily time frame and start looking at support and resistance levels. And what I'll do is I'll go on TradingView and I'll set alerts at key levels. So if his target exit is at like the 33-cent range, right? You can see that there's multiple support levels on the way down. Those for me are take profit levels. So once it hits one of the ones above, I'll go and market. I'll take profit market 25%, and then as it comes down, I'll take out another 50%, and then when it comes down and hits the final target, that's when I'll market sell the whole thing or market buy the whole thing and completely exit the position. So that's something that I personally like to do, rather than going off of the stuff that they have, which is like take profit at 25% or things like that. So that's something that I personally like, and so I wanted to throw that out there,
Yeah.
so you guys can have an idea of how I usually short, and I do this with longs as well. But yeah, that's just what I wanted to add. You're doing a great job, Nick.
Thank you for that, Brian. Yeah, and I'm not the TA guy really, but like it just to kind of expand and maybe test myself a little bit too on what he said. Without Brian's TA, I would, if this was my short and I didn't have him, I would probably take profits. Maybe not in this one because it's so. Actually, no, that's already pretty far. See, we got to really understand how far we've come in on leverage. So yeah, I'd take some profit at this supply demand zone, this one, and then maybe let it ride to either here or all the way to the end, right? I know this was supposed to be our target, but it's actually quite common. I'll see it close and I'll be like, dude, that's close enough, because obviously you don't want to give it back. You know what I mean? Um, so yeah, guys. Now we'll do a long real quick. Let's say we're gonna long BNB, bed and breakfast. Oh yeah. Okay. So if you're on your phone, you're gonna want to make sure you're on the buy long side. And let's see, we're going to enter our price. We would want to enter, based on this chart, probably right around there. So I would set a limit for, well, maybe here. But anyway, let's just set it for there. So 232.74. Amount of BNB. Let's see, they're 239. I would want to, let's say I want to spend $2,000. So put 9 of them. And then let's say I want to do, I don't know, I'm feeling crazy. I'm going to do 10x, right? Point is, I'm setting my leverage. And then you know what? I'm going to realize, Brian says he only ever does up to like 5. So why am I going to do anything different from Sensei, right? So boom, let's take it back to 5. Something for you guys to think about. And then we're going to fill in our take profit stop loss. Wow. Let's see. Take profit. Let's say we'd want to fully exit probably right here. Yeah, 289 flat. 289. We're not going to use those percentages because that's a beginner's way of thinking. And we're going to set our stop loss at, let's see, we entered 232. So we would probably want to set that no lower than like here for sure. That's already kind of big on leverage, but 215, let's say. And yep, so then we're going to double check our stuff because we like to do that. So leverage is set properly. All my prices are input right. Everything adds up. And we're longing this time. So sorry for all those pop-ups. Get out of my way. And then we hit our buy button. And again, triple check. Never hurts to literally quadruple check. And again, I'm not sure why they put that weird number. Sorry that I don't have a better answer for what that's there for, but it definitely is. We're spending $2,100, not $420. Really strange. I'm not sure. Sorry about that. Anyway, we're triple checking all of our relevant info, price, the amount, and our TP and SL, and boom, we execute. And that's what's cool again is it gives you your predicted liquidation price based on everything you put in. Oh, and one more really big piece of info that I haven't included yet is say you're doing 5x and say you put in this amount, $2,100. Your liquidation level, let me rephrase that. Depending on the amount of funds that you open the leverage trade with, the more funds, the more room that the exchange gives you before liquidation. So say we had entered this setup, but with 20 grand, I don't know the exact math, but it gives you a much bigger like a window and buffer zone for to be able to sit through swings before liquidation comes around. So something to be aware of. So say you were thinking, oh, I'm just gonna open like a $200 trade, which I've done. You know, I know it's tempting, and it's actually maybe not the worst idea to practice a little bit. Not financial advice, but you know, with low amounts of money. But you also have to remember that it's gonna you could liquidate really easily, and especially if you're on 5x. You know what I mean? So something to be aware of, guys. The more you put into a leverage trade, the more buffer zone you have, the more room you have to sit through any swinging. So that's really important to think about. And that about covers it.
And you're only going to get liquidated if you hit liquidation price. It's
Right,
not going to.
right. So here, let's actually try and execute this. So right here, it says we're gonna liquidate at 188.51.
Oh,
So
okay.
yeah, so you'd be fine all the way until it goes down to. You'd have a long way to go.
Yeah.
Yeah, interestingly,
And
almost lined up with that wick.
and
uh,
then just for the sake of example, Nick,
yeah.
you guys talked about a box you could uncheck and then you can go past liquidation. I think you guys mentioned.
Right.
Like, and then you would owe.
Yeah, I don't see where that is on the desktop. I should have prepared, practice on the desktop. I didn't know that it was going to be so different, so I apologize for my own sort of not being fully prepared for this.
It's totally fine, man.
But
No,
basically,
that's all
if
good.
you're on your phone, I can describe it to you because I'm not seeing that here. Maybe it's because I'm not fully following through with the execution is probably what's happening. So, but let me try on my phone actually really quick.
And while you're checking your phone, something I wanted to add um, is when you're using 5x leverage. For example, let's say you're trading with $10,000 and you have 5x on it. The way that it's calculated is if you make, let's say, like 30% gains, the 5x doesn't mean you made 30% gains times 5. What that leverage basically just means is instead of trading with 10,000, now you're trading with 50,000. And so you're still making the same 30%, but your profit will be based off of 5 times your the amount of capital you're using.
Good point there. And yeah, so I pulled out. Sorry, did you have a question?
Just the leverage is more based on the loan you're taking, not like your profits, is what Brian just said, right?
Right, right.
Not the percentage, yeah. So it's basically you're borrowing. So if you had $10,000 that you wanted to long BNB with right now, and you go 5x, you're essentially trading with 50k instead of 10k. But then the percentage gains remains the same.
Nasdaq, in response to your question, so on if you're on the phone, it's on the screen where you set your leverage. You'll see right there where you pick. It'll show you this thing like a little lever that you say that you turn on or off, and it says auto deposit margin. So just definitely keep that off, unless you're real crazy. And what that means is it'll continue pulling money out of like other areas to continue keeping your trade open and not let you liquidate. So it's getting pretty wild. Right? We don't do that.
No,
And
no, I it was just for example. It was just so
yeah,
I know which box not to uncheck.
yeah. Well, and so that brings up a really good point. Like I would want to find that on like on the desktop version because I don't know why we can't see it because I want to know if it's. I'm sure it's set to off because I have it off for my account. But definitely, if you guys are gonna set this up, make sure you probably just do it on your phone until we can figure out how to check that on the desktop because that's an interesting difference. Um, so yeah, auto deposit margin always set to off. Really important one. And you could go higher than 20 if you do KYC, but there's again, that's just not what we do. I mean, we're not telling you guys what to do, but if you did want to do that, you would want a KYC. You would need to. and you'd probably want to check into some gambling addiction. I'm kidding. And is there any? I've covered everything, like the basics of setting it up. Are there any questions? You want me to do another one, or? And again, this is recorded. If some of you guys missed the beginning.
No, that looks good, man. Appreciate you guys taking the time to show us that.
Yeah, definitely. So are you just trying to pick this up, you Nasdaq personally, just to be ready, or were you thinking of doing this like are you like wanting to be a leverage type of guy? I'm just curious.
Oh, I wasn't the one who brought it up. I'm just here because I'm interested in seeing it. That's all.
Cool.
Would I
Cool.
do it in the future? Sure. I'm not at that point just yet, but you know,
Cool.
if there's a good move and you guys mentioned, sure. But no, I'm not personally looking to do that anytime soon.
Okay. Yeah, I was just curious. Just
Learning
chatting.
how to short is extremely important because if you look at the market cycles, markets only go parabolic for maybe like 6 to 9 months out of the year at max. The rest of the time, it's in a bear trend. And the reason for that is because just talking about crypto in general, um, it goes parabolic. Like it does insane volatility to the upside in a really short amount of time. So it takes a really long time for it to cool off, right? That's why we have these kind of extended crypto winters. Um, and so if you're only investing and trading in one direction, which is going long, you're only going to be in profit several months out of the year. And so it's really important to actually understand how to go short so that you can take advantage of the long extended bear cycles that we have. I look at it like, you know, I look at it like going to the gym, right? If you're only going long, it's equivalent to just training upper body when you're at the gym. So learning how to short is extremely, extremely important. Even if you're not a day trader, even if you're just an investor, um, you'll want to learn how to hedge against your portfolio during 50 to 90% corrections. So in bull markets we get 50% corrections. In bear markets, that's when you get the 80 to 90% corrections. So during those times, if you're investing and you don't want to touch your investment bag or you don't want to sell, what you could do is take your stable coins that you have set aside for short-term opportunities, and you can go short on other projects. That way, you're protecting your portfolio. So as your investment bag is coming down, you can go short on another coin, and those profits will start to balance out your investment portfolio, which is coming down. And so your goal is to try to walk out of that correction with little to no loss. If you put more into that short, you're actually going to come out in profits. But the point of it is to protect your portfolio. The last thing you want to do as an investor is do nothing. And by doing nothing, you'll sit through that 50 to 90% correction, depending on if we're in a bull or bear market. And so that's why it's really important. I think that every investor and every trader should have in their toolbox is learning how to properly short.
Yeah, definitely. And then, I went over shorting just recently, maybe last week, but it's the same as going along, I guess, right? You're just making money on the way down, and as long as you automate it so that you get stopped out, you're totally fine shorting whatever. So
Yeah.
might as well do it.
Yeah, it's like if you just don't, like there's a lot of people who don't like margin and leverage, and it makes sense. And I mean, I've said like 10 times already, like we tend to just do it shorting because you have to. It's like, you know, if you could short without leverage, that's more what we would do, right? So like it's almost like they're separate things, but then they're not, just because that's how the exchange rolls, I guess. But yeah, not shorting because you don't like leverage it's like Brian said. It's like not doing legs because it's hard, or because squats are scary or something. It's like you're missing out on some of the best gains you can get because it makes you nervous or whatever, or. Um,
Well, it blew my mind actually, because I guess in the regular stock market, you get like a 4-to-1 ratio if you're shorting with leverage, and so you can just you have 4 times the amount of money to play with, and if you're setting your stop loss at 1% of your portfolio as a maximum that you can lose, like you just play with a ton of money and risk fuck all of your account. So it's pretty powerful when you think about it.
It is. Margin gone wrong is terrible. Like it's really powerful both ways. It's a double-edged sword. If you looked up in the dictionary, you'd see freaking margin trading. And it's
Yeah,
like it
yeah,
can be a great tool. It just has to be controlled. It's like having a really sharp knife, I guess. But
yeah, yeah. You stick to your rules.
yeah, there's if we had if without the ability to short, we would have just had to sit through the entire drop. And I'm not sure if you were around. I feel like you didn't see some of the recent shorts we had. You kind of showed up right afterward, but we shorted from like a big portion of the market dropping down from like I don't remember, but 40K, at least 33K we shorted. And so like a bunch of people made a lot of money, and it's just like there were easy opportunities. They were obvious, at least for us. You know what I mean? And it's just literally money, literally a lot of money left on the table. So yeah, glad we got you
Yeah,
guys
no, I
set up.
came in right after I think, but I'll be around for next time, so
Yeah.
that's cool.
Yep. And yeah, there will be one eventually. I don't know when, but don't we have cycles. So that's
Yeah.
why shorting, and Brian already alluded to that too. Like without being able to short, you literally have to sit on your hands for a ton of time. It's not only up. I know up only is a cool phrase, but it's not. So, you yeah.
Yeah, you don't wanna be in the position of, breaking even 4 years after you get into something, right? So yeah, you
I
might as well
mean
make money
yeah, it
throughout.
just while 4 years isn't a long time to sit in an investment, it's also like not doing anything. Say you have to wait 4 years. If you don't know how to trade and take advantage of the market's declines and stuff in the meantime, then it's say the market's in a downtrend for like a year, and you don't trade against the trend. Well, you can't trade for a year, and if you do, you're probably getting chopped up. So
Sweet. Well, thanks again, guys, for taking the time, and yeah, I look forward to putting it to the use when the opportunity shows up.
sweet. Yeah, thanks for
Thank
coming
you, Nick.
in. Yeah, thanks guys.
Thanks, Nick.
Thank you, Brian, for jumping in there. And I will see you all later.
Take it easy.
All
Have
right,
a good day,
guys.
everyone.
Have a good day, guys.
Cheers.